Welcome to the channel, everyone. If you're looking to become a funded trader, or you've got some money of your own that you want to trade, could be $100, could be $1,000, doesn't really matter on the size. You're going to be wanting to apply risk management if you want to be profitable in the long term. And so make sure to watch the end of this video if you need help with that. So I'm going to be going over these 5 steps and finishing with a little FTMO trick that you can use on any funding account that you'll probably find useful if you ever go for one of the challenges. But first, just want to stress the importance of risk management. I know a lot of people will think and will tell you that the strategy is the only and main important thing of becoming a profitable trader, when in actual fact, a strategy is a small part of the overall picture. And things like risk management and psychology can play an even bigger role than you think, and even a bigger role than the strategy itself. A lot of people can find a profitable strategy, but being able to trade it with the right psychology and right risk management is when errors are made and people lose money. So in this video, I'll be going over lot sizes, how you can calculate that, and how you should decide on that. I'll be talking about risk-reward ratio and win rate, and how this will affect your risk percentage. Then I'll be talking about capital exposure, how much money you want to effectively put on the line every month when going for a funded challenge. And then probably most importantly, I'll be going over a table that shows the chance of having consecutive losses in a 50 trade period, and you'll find that it's a lot higher than you think. And after looking at that, you should hopefully have a better understanding of your strategy and stop hopping between different strategies when you have a few losses in a row. And then finally, we'll get onto the FTMO trick. Okay, so the first thing I want to talk about then is lot size. And the important thing about this is to remember that your risk and your stop loss size is going to determine your lot size and not the other way around. You might see a lot of signal providers telling you if you traded with 0.1 lots or 1 lot, then you'd make this much money. And while that might be true, it's not the way to trade, because some trades, you'll have a higher pip stop loss compared to the other trade, and so on some trades you might be risking 0.7%, and on other trades you could be risking 3%, and that's not how you are going to become profitable. You might be able to make a bit of money in the short term by gambling, but in the long term you need to have a fixed risk every trade, and when you become more advanced you can increase your risk on certain setups, decrease it on others, but you want to have a set risk percentage per trade. And so I'll get into how you can determine how much risk percentage you want in the next 2 slides. But for now, I'll talk about how you can calculate the lot size if you know your risk percentage. And for that, you're going to use a calculator. The one that I use is on a website called Cashback Forex. And we'll go to that now. And as you can see at the top, just a link, cashbackforex.com/tool/position size calculator. You don't need to type that all in. You can just go to the website and then on the left here, click lot size calculator. And so what you're going to want to do with this is select your instrument. It could be GBP USD. Just select that. Choose your deposit currency, lot here. Put the open price that you want to enter from and your stop loss price. And then you can enter your account balance and your risk percentage. You can also put a risk amount if you want to risk, say, a certain amount. But to keep it simple, and to risk the same amount every trade, put your account balance in and put your risk percentage. Then all you're going to need to do is come down here and click calculate, and it will tell you the lot size that you need to place your trade with to have this risk percentage with these values. And if you're trading something like the Nasdaq, then what you find is that if you try and calculate your risk with you put in your open price and your stop loss price and all the other values, when you try and click calculate, it will tell you your unit size, but it won't tell you your lot size. And so what you're going to want to do is, where it says here, calculate lot size in MT4/MT5, click on that, and then go to your MT4 or MT5, find the symbol, go into the settings of it, look at the details, and it will tell you your contract size. A lot of the time it will be 1 or 10. So once you put this number in, you can click calculate, and it will tell you the lot size. So if your contract size is 10, with these values, you'd want a lot of 3.77. And then if your contract size was 10, this would change it to 0.377. And so it will be important to make sure if you're trading indices, make sure to put the contract size in. For Forex, it does it automatically, and it'll put it as 100,000. So I'll also leave a link to this in the description, but definitely start using it. You can use a different one if you want. This is what I use and it works well. So I'd recommend using this one. Very simple to use, and make sure you put in your risk percentage and risk the same amount each trade. So then the next thing I wanted to talk about is your risk-reward ratio and your win rate, and how this is going to affect how much you might want to risk. So obviously, in general, not always the case, but in general, if you have a higher risk-reward, then you're going to have a lower win rate. If you think about it, if you have a risk-reward of 1-to-1, break-even would be a 50% win rate. If you have a risk-reward of 1-to-10, your win rate is going to be a lot lower to be at break even, and so having a high win rate with a high risk reward is going to be hard. And so the general rule is that if you have a higher risk reward, then your win rate will decrease. And so then a consequence of having the lower win rate is going to be that you're going to have more consecutive losses, which we'll get into the next slide. But if you have more consecutive losses, you'll probably want to reduce your risk, especially if you're going for a funded challenge where maybe the max drawdown you can have is 10%. If you lose 10 trades in a row risking 1%, which is entirely possible with profitable strategy, then you're going to blow the account and fail the challenge. And so this is going to be a bit of discretionary, but if you have issues with this on deciding on risk percentage, you can just send me a message on Discord and I'll help you out. But if you have a really high risk reward, I recommend going down to a 0.25%, because even though you're not risking much, if you get a winner, if you say get a 1 to 10, that's going to be 2.5%, which is still a very nice profit from one trade. And when you lose, you can lose 10 trades in a row, and that's only going to be 2.5% lost. So deciding on your risk is going to be an important factor in following your risk management plan. So actually, before we go into consecutive losses, I just wanted to talk a bit about capital exposure. And this is going to be the number of trades you take per month multiplied by your risk percentage. So if you take one trade a day, that's going to be about 20 trades a month trading on weekdays, and your risk percentage is 1%, then your capital exposure is going to be 20% per month, which I would say is the upper limit of how much you should be risking per month, with the lower limit being 10%. If you're anywhere in that range, then that's good. If you're more risk averse, then you might want to go for 10%. If you don't mind a bit more risk, you can go to 20%. Anywhere in that range, I would say is good. Obviously, it's up to you. You don't need to follow my plan, but you're just going to need to work out how much exposure you want, and then you can calculate your risk percentage from this. So this will help as well if you're not too sure on how much you should be risking from the last slide. If you know you take 10 trades a month and you want your capital exposure to be 20%, then you can risk 2% a trade. Just make sure that that is still somewhat in line with your win rate. If you have a really low win rate, then maybe risking 2% isn't smart, because it's going to be likely that you lose 5 trades in a row, and that will fail your challenge. And then going on to consecutive losses, the question you're going to need to ask yourself is, how many losses in a row do you need before you stop following your risk management plan? And this can be looking back in the past. Maybe you were trading a strategy that was going well, and then you lost 3 trades in a row, 4 trades in a row, 5 trades in a row, and you just dropped the strategy, said, it doesn't work. Whoever I learned it from doesn't know what they're doing, and the strategy is wrong, not my fault. Trying to put the blame on the strategy rather than your own psychology and risk management plan. And everyone's been there. I've hopped between strategies when I was a beginner trader. Everyone does it, but I had to learn on my own that that's not what you're supposed to do, and now hopefully you can learn from me. You don't have to go through all the constant losses and jumping between strategies that I went through, because you can look at this one simple table, and it's a lot of numbers, but it is simple when you understand it, and this will help you with your psychology when dealing with consecutive losses. So what this table shows is the probability of seeing a number of consecutive losses within a 50 trade period. So this could be 5 months, anywhere from like 2 months to 5 months, depending on how many trades you take per month. It could be shorter or longer, but that will depend on how many trades you take. And so if you know the win rate of your strategy, which you should, if it's around maybe 60%, if we go look at the 60% here, you have a 70% chance of losing 4 trades in a row, which is going to put a strain on you mentally. Even though you win more trades than you lose, with the 60% win rate, there's still a 70% chance you're going to lose 4 trades in a row within that 50 period trading period. And so is that something that you can deal with? Because you don't want to hop between strategies, because even though you have a profitable strategy, just because you lost a few trades in a row, are you going to let that stop you from becoming a profitable trader long term? And this is when looking at a 60% win rate. If you go down to some strategies that have a 30% win rate, which is still, if you have a high risk reward, that can be a very profitable strategy. If you go all the way to the end, you've got a 55% chance of losing 11 trades in a row. And if you don't think you can follow your risk management plan and your trading plan following the strategy exactly, after losing 11 trades in a row, once you've lost 8, are you going to place another trade exactly following your plan? And then what about after 10 trades? There's a 70% chance you're going to lose 10 trades in a row. For the next trade, are you going to place it exactly the same following the rules? And if you do, it could lose again, because there's a 55% chance that 11 trades in a row will be losing. And this table isn't something that people realize. People expect it to be, you win a trade, you lose a trade, win a trade, lose a trade, and overall you'll be up. That's not how it works. You could lose multiple trades in a row and then win multiple trades in a row. All you need to know is that over time your strategy is profitable and that you can handle these large drawdowns. And then you can also use this table to manage your risk percentage. Obviously, if you're going to lose 10 trades in a row within the 50 trade period, then risking 1% probably isn't a smart idea, because it's likely that you're going to lose 10% in a row, and that will fail your challenge. So that's something to consider. But now we get on to the final slide with the FTMO trick. That's just something that I want to stress, is that you should only be using this in the last few days. Don't use it from the start, because you're just going to blow challenges. And even when you're using it in the last few days, you can still fail your challenge. It isn't some holy grail, but it's going to help you win a lot more challenges and get some more retries. So what you're going to do is you're going to increase your risk in the last few days if you're in drawdown, or if you're in profit but not reached the target yet. And so this could be increasing your risk from 1% to 2%, 1% to 3%. You'll have to work out the maths on your own, depending on how much time you have left, how many trades you think you can take, and how much profit percentage you need. So a lot of funding challenges offer retries if you're in profit. And so if in the last few days of your challenge you're in a drawdown, what you're going to want to do is try and get into a small bit of profit. So say you're 5% down and you're allowed 5% more loss. What you could do is you could risk 5% to make 5%. If you can only place one more trade, you only have time for one more trade, you can risk 5% to make 5%. And if it loses, you lose. You're going to lose the challenge anyway. But if you don't and you make profit, then you get a retry. And so that's kind of the general theme of this FTMO trick. And then similarly, if you're in profit, you're going to target the next phase, but you're going to want to stay above break even. You don't want to risk failing the challenge just to maybe get the profit target. You're going to want to target the next phase, doing the same kind of strategy, risking a certain percent to make another percent, but you're going to want to make sure that you stay in profit even if you lose however many trades you can still place before the end of the challenge. So make sure you stay above break even so you get the retry. So that's the end of the video. If you need to rewatch it, make sure you do. Make sure you understand all of these 5 steps. Make a risk management plan. And if you have any questions about any of the steps or just anything risk management related, then send me a message on Discord, leave a comment. Also, if you found it helpful, then please do leave a like and subscribe and leave a comment down below. It really helps. So thanks for watching, and I will see you in the next one.